Hello and good morning. I'm Ed Katashabe. This is Traders Next Door, and you're about to hear the Daily Scoop. It has been a really interesting time in the markets right now, and we are at a somewhat critical point of the year. We have one more FOMC meeting to go in December. We have Donald Trump taking office in the new year in January. NAS and US 30 have seen a rally back into strength. The dollar is still looking extremely bullish. The markets are alive and well. So let's talk about some of the factors that are going to be important heading into the end of the year and what we can expect. So let's start off with the Federal Reserve and their recent remarks. Big Daddy Powell has hinted that the Fed is not in any hurry with further rate cuts. He believes that, in fact, right now, the economy is really signaling that further rate cuts may not even be necessary. And this is going to be very important heading into the new year. Now, what we can see is the economy is looking really bolstering and strong in the US right now. And this is important because if the Fed cuts rates, this typically leads to cheaper borrowing costs for both businesses and consumers alike. And this can be very bullish for stocks, in particular tech stocks. And this normally also leads to a weaker dollar as investors look to seek for higher returns somewhere other than the dollar. However, Powell's comments tell us that the Fed is watching the economy very closely right now. So whether or not they're going to cut rates in December is still left to be seen. They're waiting on some of the data to come out. But despite challenges like the hurricanes, strikes, the uncertainty before and after the elections, and everything that's been happening in the US right now, consumers are still spending at a good rate. We saw a higher than expected retail sales data came out a few days ago with a 0.4 increase, greater than the 0.3 increase that everyone expected. So this suggests that the economy might be growing a little bit faster than was expected. The GDP forecast for growth came in at 2.5% for the year and 3% for the fourth quarter. The Fed originally at the beginning of the year forecasted about a 2% growth on the year is what they were wanting. So this faster than expected growth could make the Fed reconsider what timeline they're using for the rate cuts as they originally communicated. So it's going to be very interesting to see where they go with this in the coming weeks and months. Now, looking at the impact that this has had on the US dollar, if the Fed decides to hold off on rate cuts, this might lead to a lot more bullish action for the dollar as foreign investment looks towards the dollar in order for quick and easy gains. And this would increase the investor's portfolio if the dollar was to go up. However, it's a little bit more complicated than that right now because we do have a new player introduced into the game. With Donald Trump set to take office in January, there's also an added layer of complexity because with his administration, he has promised to implement tariffs, tax cuts, and the like, and this is going to play its own little role on how things play out. Looking at the tariffs that he's probably going to impose on imported goods, this is going to most likely create a little bit of inflationary pressure. Higher tariffs often lead to higher prices for consumers, and this might trigger the Fed into action. If inflation rises a little bit too quickly, even if it's due just to the tariffs, this could further put the Fed in a rate cutting course. So the market right now is in a bit of a crossroads. We're uncertain what's going to happen, but we are certain that it's going to be a really interesting time in the market come that new year. So as we look to 2025, we're going to keep a keen eye on the economic data. We're going to be looking very carefully at what's going to happen, but the beginning of 2025 into it is going to be a very interesting time for the Fed. So we're very keen on seeing what's going to happen in the next coming weeks, in the next coming months. It's going to be a very interesting time in the markets, and we are here for it. If you're looking to take advantage, you can use the code 2Gs. The link will be in the description down below. Purchase yourself a Vault Funder account and use these volatile and economic times to make some gains. It's going to be a very interesting time. And speaking of very interesting times in the market and people using that to their advantage, The Ultimate Trader Season 2 is well underway. We are at the tail end of week 3, and it is looking very interesting. We have the leaderboard up right now. We have a nice little shakeup from what we had last week. Armand Nell, who was on the leaderboard week 1, kicked off in week 2, back on there for week 3. We have Kyle Vessels there, perfectly set up in the third place position. And we have Kevin in first place still for the second week in a row. The top 6 traders in the Ultimate Trader right now are all in the funded stage, with the top 8 all in phase 2 or above. So the Ultimate Trader is looking extremely spicy right now. Things are looking heated, but we're only halfway into the competition with another 3 weeks to go. So as of right now, entries are still technically open, but at the end of today, that is probably going to change. So you have one last opportunity to get into the mix. If you think that you can chase Calvin for that top spot, now is your chance. Use code TUT, get 30% off your Vault Funder account, enter the Ultimate Trader, and prove to us and yourself that you can be the Ultimate Trader. I've been Ed Katashabe. This has been Traders Next Door, and you have just heard the Daily Scoop.